This is question number 3 on homework or on practice homework 8 for module 10. So this is a question about given the payments for the future payments for the operating lease, we are asked to verify the liabilities which are shown on the balance sheet. We know that based on what we learned in this module, the lease liability should be calculated as the present value of all future lease payments, and that will be reflected as the liability on the right-hand side of the balance sheet. And on the left-hand side of the balance sheet, that's going to be the right to use asset. And there's some adjustment based on this present value amount to get to the right to use asset. But for this problem, we don't have to worry about that. We just need to actually verify why the liability and the liability of the lease is what's reported on the balance sheet. So that's basically what the question is asking, and you can read the setup, and it just basically describes what the new rule for the lease recognition, especially in terms of the operating lease, and as compared with the prior before 2019, because the new lease recognition rule took effect beginning in 2019. So basically, I think we need to focus on this table, the table below presents information about future operating lease payments, and that's for the end of March 2019, the quarterly data, and also from the 10K, the annual data. We also are provided with the expected lease payments for in the future, and we also need to sort of figure out what is the total present value of that. So that's going to be the last part of this question. So we start from the first one. What operating lease liability did Goldman Sachs report for the quarter ended? So that's directly from the balance sheet, right? The table below represents other liabilities by type. So that's operating lease liability. That's right here, 2413. So we just copy that number. And what right of use assets did Goldman Sachs report for the quarter ended on March 31st, 2019? Again, that can be directly found from the balance sheet. The table below presents other assets by type. So it's operating lease right of use assets. Just copy that number, and then we are done. So the first two part is pretty straightforward. The hardest parts are the last two. Use an Excel spreadsheet and the information on future operating lease payments to verify the total liabilities of $2413 million on the 2019 Form 10Q. And a hint is provided. The amount will not be exactly 2413. So enter the amount computed in Excel, round your final answer to the nearest million. So I guess since even if the question doesn't ask us to use Excel, but in this case, actually, it directly asks us to use Excel to calculate and put back the answer. But even if it doesn't, I think it's most convenient to use Excel. So we just copy that table and paste the special by text. And then you can see that all the numbers will be automatically copied into Excel. So if you look at this table, remainder of 2019 is there's a payment, 2020 there's lease payment, and that continues for until 2024 193, and after that date there's a 2025 and thereafter. This is a aggregate or the sum of all future lease payments after 2025. And you can also see there's a weighted average remaining lease term. So this is 18 years. And I want to get rid of the years here because later on I want to directly operate on this sale value. And weighted average discount rate is 4.85%. So what this means is that this remaining lease life closely matches uh, corresponds to this thereafter number. Well, why? Because it can tell us what is the annual, sort of the annual lease payment, or simply be this total or aggregate lease payments divided by this 18. So we have 18 years to go, and that sums up to 2494. So each year we expect to have this sort of the lease payment. So remember, this 2025 means that it's going to be 138.56, and that continues for 18 years. But I will omit that part. But we need to keep in mind this is an annual lease payment, and it's constant. And why that matters? Because then we can use the present value of the annuity formula to figure out the present value of all these 18 lease payments. But then we need to remind ourselves that the formula actually applies at the beginning of the time period. So in terms of 2025, that means if we are going to use that formula to calculate the present value of that 18 lease payments, that present value is in terms of 2024. So that's why I write this as at present value of the remaining lease payment at year 2024. So I can calculate this equals PV and open at. The rate here is the discount rate, and that's directly given, the average discount rate, weighted average discount rate. And then the MPER, obviously, that's the 18 here. That's why earlier I got rid of the years. And then the payment is just directly this 2025 sale value here. And the rule for Excel is that if you want to get a positive present value, then you need to put the payment in negative format. So that's why I added a negative sign in front of this. And the other inputs here actually do not matter. If you look at this function here, you can see that after payment, there's future value and there's type, but both will be the default amount. The future value is the future lump sum future cash, but there's no such lump sum future payment. So we can just omit those two inputs, and type is whether it's beginning of the year or end of the year convention. That by default it's end of the year convention. So that's again the default amount. We don't have to worry about that. So if we put enter, and that then the Excel will give us the present value of these 18 annuity payments or lease payments. But again, we need to remember that this is in terms of year 2024. So, and then that means we still need to discount this further back to 2019 to really get the present value of these 18 lease payments. So now the rest of the job is simply to get the present value of all these 1, 2, 3, 4, 5, right? And six lease payments. We want to get the present value of these 6 lease payments and plus the present value of this. We can call this the terminal, right? The terminal lease payments. So then we are done. And then let me get the present value here. Just calculate the present value right here at present. And that equals, in the book, it just calculate, you can also follow the book and calculate the present value of the first payment and present value of the second payment and present value of the third payment and so on and so forth. And then you add all those present values up. And then, of course, don't forget the present value of this terminal lease payment. And then you add all those present values up, and then you're done. But actually, Excel has an even simpler way to calculate this. That's called NPV. We know that if you have learned some other finance courses, you know that NPV refers to net present value, right? But actually in Excel, the function NPV is only calculating the present value of all future cash flows. It does not factor the current cash flow into the formula. So that's why actually that's exactly what we need here. We just need to calculate the present value of all future lease payments. So this NPV function actually is exactly what we will need. So the NP equals NPV, if you open this, you can see there are a bunch of inputs. The first one is the rate. So that's the discount rate. And starting from the second one, that refers to the cash flows. And the format required for this NPV function is that, as I said, the NPV function actually only calculates the present value of all future cash flows. So you need to put the cash flows in the specific format, which means that year 1 cash flow, year 2 cash flow, year 3 cash flow. So every year you need to put a cash flow. If in a certain year the cash flow is 0, you still need to put 0 there. You can't omit the value. So then Excel will correctly use this function to get you the present value of all future cash flows. And that's actually also the case because starting from this 2019, the remainder of 2019, we just put this and then the final, just drag the cell or press the shift and drag the cell all the way down, and then you can see it's from B2 to B7. That refers to the 6 lease payments. And we can close this function now. But remember, this is only calculating the present value of these 6 payments, and we're still left out of this final terminal lease payment. But we can simply do that manually because this is now we can simply discount this, right? Discount this. This is D7 and over 1 plus the discount rate. Discount this back to the true present. And by how many periods we can simply count, right? 1, 2, 3, 4, 5, 6, 7. 6 actually. This is yeah, 1, 2, 3, 4, 5, 6. Yeah, so we're gonna have 6 years to discount back. And then we can just press enter. And since the question asks us to round to have no decimal place, right? So we can just choose to round no decimal place. And now I can just copy the number back. And that's gonna be, you can see as we were warned, or based on this hint, the amount will not be exactly 2413, and that's exactly what we have here. So we are done with the third part, and the final part is similar actually, but now we are faced with the 10K rather than the 10Q, the quarterly statement. So use the information from rental payments from December 2018 Form 10K. So that's the last table here. to calculate the present value of future payments at the year end. So all these numbers are presumably at the year end already. Use the same average weighted lease term and discount rate Goldman Sachs discloses in the 2019 Form 10Q. So basically, what the last sentence tells us is that we're going to still use this 18 years and the discount rate, and then we're attached to this 10K table here, and then we are still calculate the present value of all future lease payments. So enter the amount to compute in Excel, draw to a final answer to the nearest median. So again, the first step for me is to copy this into Excel. So copy that and paste the special by text. And then similar to what I did earlier, what I want to do here is to write just a 1 year. But remember, this 1 year represents the payment. It's the constant payment for the next 18 years. So it's going to be 13. Now the thereafter amount will change, right? It's 1310 divided by 18, right? We still have 18 total payment, lease payment after 2023. And so similar to what I did earlier, so I can just write this as PV of remaining lease payment, right? So this will be PV equals PV, and rate will be the same as before. And the second argument here is 18, right? We have 18 annuity payment, the same as before, but now the payment will change because the aggregate amount here also changes. So the payment will be this, this B24 represents the 2024 amount. Again, I want to add a negative sign in front of that because I want to get a positive present value. But again, remember this present value is in terms of year 2023. So now I can calculate the true present value. This will be at 2019 year end. So this will be, again, I want to use the NPV function, 4.85%. And starting from the second input, I just put my cell starting from the first cash flow or the lease payment and press shift and drag all the way down to the last year. By last year, I mean the year that I want to calculate the present value of these payments. But I know that by choosing the year 2023, actually I haven't incorporated this present value into the calculation yet, but I will do that manually like what I did earlier. So close that and plus the present value of this terminal lease payment and discount that back to the true present this discount rate. And now I have sort of also I guess 5 years to go, right? It's 5 years to go because 2023 minus 2018, that's 5. So it's gonna be 1641, and you can format cell and choose 0 decimal place, and that will give you 1641. Just copy that number back, and now I can check my answer, and all these are correct.